If you want to achieve financial freedom, stop thinking like an employee and start thinking like a business. Because the truth is, you already are one. You have income, expenses, assets, liabilities, and a brand new reputation. Whether you realize it or not, you're running a personal economy every day. The difference between those who stay financially limited and those who scale their wealth comes down to how they manage it. Most people see money as something they earn and spend. But wealthy people see it as something they manage, grow, and scale. They understand that every euro, dollar, or pound they earn is a resource, a unit of potential that can either disappear through consumption or expand through investment. The moment you start treating your personal finances like a business, your entire perspective changes. Businesses don't survive by luck. They survive by systems. They track cash flow, reinvest profits, build reserves, and create assets that earn revenue even when they sleep. So why shouldn't you do the same? If your goal is long-term freedom, your personal finances need the same structure and discipline. You are the CEO of your own economy. The question is, are you managing it like one? Think about this: a company doesn't take all its profits and spend them on luxury. It allocates some for operations, some for reinvestment, some for reserves. It measures return on investment, cuts unproductive costs, and doubles down on what works. The same principles apply to your personal economy. Every paycheck isn't a finish line, it's cash flow. Every expense is an investment decision. Every dollar saved, every asset acquired, is a move on your personal balance sheet. This mindset shift is where the wealthy win. They see themselves as both business owners and investors. They earn actively through skills and ventures, but they grow passively through reinvestment and ownership. Their lives are structured like a financial ecosystem. Each part supports the other. The income funds the assets generate more income, and the cycle repeats. That's how you scale your personal economy, by building loops that feed themselves. Let's make it simple. If you have a salary, that's your business revenue. Your rent, bills, and living costs are your operating expenses. Your savings and investments are your reinvestments. And your skills, health, and network are your intellectual capital, your research and development. When you frame your life like this, decisions become strategic. You stop asking, "Can I afford this?" and start asking, "What return will this bring to my personal economy?" That's how investors think. Every decision has a cost and a yield. Time, money, and energy are all capital, and capital should never be wasted. If you spend 3 hours scrolling instead of learning, that's negative ROI. If you buy liabilities that drain cash flow, that's bad investment. But if you invest those same hours into improving your skill set, starting a side business, or automating part of your finances, your return compounds. This mindset also helps you weather volatility. In business, markets shift, costs rise, and opportunities evolve, but strong systems adapt. Your personal economy must do the same. Build multiple income sources, minimize high-interest debt, and maintain reserves so that you can survive downturns and reinvest when others panic. That's what smart investors do. They thrive in cycles because they're prepared for them. The key to scaling your personal economy isn't complexity, it's consistency. Businesses grow by repeating what works. So does your financial life. Automate savings, reinvest regularly, track expenses monthly, and keep improving your earning capacity. Small, repeated improvements create exponential results over time. You don't need to overhaul your life, you just need to treat every financial habit like a system that deserves refinement. Let's talk reinvestment. The average person saves money to spend later. The wealthy save to reinvest. They use profits from one area to fund another. Profits from work fund investments, returns from investments fund education, and new skills increase earning power. That circular motion is the secret. Each reinvestment makes the next one bigger. That's compounding in real life, not just in markets, but in mindset. And don't underestimate the psychological side. When you start managing your personal finances like a business, you stop reacting emotionally to money. You see it as data information that helps you make better decisions. You stop feeling broke and start feeling accountable. That's a massive shift in identity. You move from being a participant in the economy to being an architect of your own. This is how financially independent people operate. They build personal systems that outgrow them. Their habits compound into automation. Their income becomes layered, earned, passive, residual. And when they make decisions, they're based on sustainability, not status. They think in decades, not days. Here's what it looks like in practice. You track your income and expenses monthly like a profit and loss statement. You set financial goals like a quarterly business plan. You review your asset performance and reinvestment rate annually. Just like a CFO, you allocate time to learning, networking, and building. That's your R&D. You build backup funds. That's your business continuity plan. You even measure mental energy and productivity, because your mindset is your most valuable asset. The results: you stop drifting. You gain clarity. You start seeing cause and effect between decisions and outcomes. You notice how your spending habits influence your opportunities. You begin to optimize, automate, and reinvest, not because a finance guru told you to, but because it feels logical. You're not guessing anymore, you're managing. And then something profound happens. Your wealth begins to compound quietly. You build momentum. You start earning from multiple sources. You begin to view the world differently. You see value everywhere, not just in money, but in systems, leverage, and people. You stop thinking like a consumer and start thinking like a creator. Because that's what business owners and investors do. They create value first, and wealth follows naturally. Scaling your personal economy isn't about earning more, it's about managing better. It's about having a strategy for every dollar, every decision, every opportunity. It's about building a system that serves you, even when you're not watching it. You become both the operator and the investor in your own life. So if you want to build lasting financial independence, stop waiting for a raise, a windfall, or the right time. Start optimizing what you already control. Track your money like a business tracks performance. Reinvest your profits like an investor compounds returns. And most importantly, stay consistent, because every system, no matter how small, compounds over time. You are the CEO of your personal economy. And when you start running it with purpose, discipline, and vision, your finances will grow in ways that luck and timing never could. Disclaimer: this content is for educational purposes only and not financial advice. Always do your own research before making investment or business decisions.